What's going on, everybody? Today I wanted to talk about Microsoft. Is Microsoft a buy? Because on the chart, it's starting to look like good value. But there's a few big problems and red herrings I found when looking into this business that you should be made aware of before going ahead and purchasing it. I'll also leave you with two calculations on where I think Microsoft might be worth a decent purchase. Now, before we get into that, we are going to be giving away a few t-shirts now on every single live stream. These shirts will be provided by a company called Karma Factory. There's a link for it down below in the description. The guy who runs it's an American veteran, and some of his shirts are absolutely hilarious. Use the coupon code MVP15 to get 15% off on your purchase. Link for it down below in the description. Now let's move over to Microsoft. Microsoft has took a bit of a beating lately. We're down 30% over the last year for a company valued at 1.7 trillion. This is, well, it's a lot of money to lose in market cap, but you'd think they'd be a little bit more less volatile. Now, if we look at the cards quickly, my personal cards, you can customize these to find out in seconds if a stock is worth buying. My cards show that the revenue of Microsoft, as expected, is pretty insane. It's growing at a great rate, and the net income is doing good too, showing that they have a good way of increasing their revenue and also getting cash flow from it. Their free cash flow is also on the rise, which is a good sign to see. Steady increases on free cash flow. They're starting to buy back shares, or they have been for the last 5 years, should I say. And if we look at a quick ratio, 1.59 there, which basically means that they're very limited chance of going bankrupt anytime soon. But the cash ratio could be better. A cash ratio, you want it above 0.5. Typically speaking, personally for me, I like it as close or above 1 because it means basically their short-term assets they have on hand, aka cash, can pay off all their debts and liabilities like this. This means they've got 26% coverage. And I don't think that's really an issue because, well, they could probably pay it off with just 1 quarter if they're a bit frugal. Their net profit margin, however, is 34%. Insane. That's pretty damn good. A price to earnings ratio of 24. I was personally expecting this to be a little bit higher. That's actually quite good for a company like Microsoft, and a price to free cash flow of 26.97. Overall, Microsoft looks pretty damn good. Let's have a little look at what insiders are doing. Now, if we move over to the insider tab and we have a little look here, as expected, you've got 26% of retail investors and 73% of institutions. This is literally the way I'd like to see it. This is pretty much bang on where I'd like to be. Usually it's about 70 to 80% institutional is where I see a Goldilocks period. There's always exceptions, of course, but this is, again, pretty damn sensible and as expected. You've got the Vanguard Group owning 8%. You've got BlackRock 6.88%. And State Street owning near enough 4%. Now, the insiders, we see a few buys, a few sells too. Let's have a look at that. We can look at that just down here. But this is a decent one to look at first. There has been a slight downtrend over the last 10 years in institutional ownership. There used to be 5 billion shares owned, and now it's currently at 5.1 from, 5.7. So, yeah, not that bad. Let's be honest. It's not that much difference in terms of percentage, I mean. Now, let's have a little look at the institutional buy-ins. Most of these are awards, so all them purchases we've seen earlier look like they're bonuses of some kind. If I go down and look at the sales, which I'm struggling to find, because they were, okay, beginning of December, the chief commercial officer sold out of some shares, but, I mean, if we look at this, Alholf Judson, that's sounding like a very Swedish name. Probably not. Let me know where he's from down in the comments. He sold 400 shares, 8,068. So quite decent amounts in terms of shares, but he still owns 150,000. So in terms of ownership, it's not like he's panicking out. It's Microsoft, you can imagine. Let's look at the trading. Dan Sullivan, a popular trader and senator, well, his kids usually are, he, in his joint account, made a purchase recently of between 15 and 50,000 shares. Tommy Tuberville also made a joint purchase, but a smaller amount. And so the senator trading on this is a bit of a mixed bag, which you can expect, again, with a name like this. The analysts, never trust analysts as a rule, but what are they saying? We're currently at $200, $229 a share. Their average price target, bearing in mind these are usually 12 months, the average is 300, showing an insane potential upside. Low target is green 2 of 234, meaning if the lowest analyst is correct, you're still going to make a bit of cash. Now, again, don't trust analysts. Let's move over to a DCF. Now, if you don't know, we have a DCF model, and you can basically go on StockMVP, put in some assumptions, and it will spit out a price for you to work backwards from. Now, we need to make some assumptions on EBITDA, depreciation and amortization, and the capital expenditures. If you want to know what these mean, you can just hover over them and it will explain what every single one is. But we've given you some past performance here so you can have a little look yourself. Now, Microsoft's EBITDA last year was around about 100 billion. And the year before that, it was 90, 60, 3 years ago, and so on. So I think we're heading into a tough sort of economical world. I need to be ultra conservative. So I'm going to say we go back to, let's say, to 90 billion. We go back a year. So we're going back to like 2021, 2022 in that year period there. And we're going to start at 90 billion, okay? And then going to say that their EBITDA is going to increase by, they've pretty much hit 10% every year. So I'm going to put in here probably 12%, 12% EBITDA growth rate. I think that the next 2 years are going to be really sluggish, but after that, there could be a bit of an explosion. I think the next 2 years for Microsoft are probably going to be all on developing products that they will sell when the world sort of recovers from this crazy interest rates and inflationary environment. The EBITDA growth rate, I'm going to probably keep it what it is and probably keep that at probably, I'm going to put the depreciation at around about 12, and the capital expenditure growth rate has been falling quite a lot, actually. 24 billion. Let me think here. Let me think. I'm going to keep that at 10%. I'm just going to click populate. Okay. Again, this is a rough estimation. The next thing we need to do is need to go down to long-term growth rates. Microsoft, they steadily do grow. So I'm going to keep that at 4 and a discount rate of 12. The reason I want a discount rate of 12 is that's what I want to get from the market. So if I'm getting, like, for example, 10%, then, you know, I'm pretty much matching the market. I need to weigh up, is the extra income I'm going to get from the profits on this business going to be any better? Now, let's have a little look here. If we use these assumptions, which I think are not overly conservative, to be honest, it's in Microsoft's overvalued by 42%. That's insane because the company's already down 30% in the last 12 months. So let's make some assumptions here. If we keep everything else the same and we go up to a 20% EBITDA growth rate for the next 5 years and click calculate, we're still overvalued by 13%. Now, if I put this in at, let's say, 22, calculate. Okay, so we're pretty much there. Let's do 24, populate, calculate. Okay, so we're somewhere around this figure. So we need about 23.5, I'd say, EBITDA growth rate for the next 5 years, every single year, okay? Now, if we do that, we're at fair value and we should get approximately our 12% per year. Now, this is a problem because I don't want to go into a company to make 12% a year. I want to make a no-brainer trade. Warren Buffett famously says that he buys stocks that you simply cannot say no to. That's what you want to be looking for. And right now, Microsoft, a 20% return year on year for the next 5 years, I think might be a little bit too optimistic. I don't know. It could be too pessimistic. I mean, that's up to the individual investor. So that's my thoughts as it stands on Microsoft. Is it a good buy? I don't know. If Microsoft falls another 30%, it might become more interesting to me. And those of you who might have seen something, we have a new tool called the SEF tool. But that's coming in a different video. If you haven't subscribed, please do so. Check out the merch down in the description to help out a veteran. And don't forget, there is a 10% coupon code on StockMVP if you use the coupon code LWT10. Link for that down on the pinned comment. See you in the next one. Have a great weekend.